The GBP versus the USD just breached multi-year highs and could be on its way to levels we haven't seen since early 2018. My name is 𝗿𝗲𝘁𝗶𝗹 and this is our market update on the pound versus the USD. Alright, before we actually take a look at the pound versus the USD, I want to remind everybody that we have a special premium course on investingcube.com which covers my best content I learned over the last couple of years, and more importantly covers a trading strategy I've been using as well, and that has helped me to have a very good 2020. In fact, I've been using various variations of the system since 2014. And if you want to learn more about that, because it's actually totally free to get that, just head over to investingcube.com and then look at Learn to Trade and Forex Trading course. I'm going to put a link as well in the description of this video so you can easily find that course. You can pay for it or you can just get it for zero cost if you open up with our preferred broker, ATFX. Alright, let's take a look at the pound versus the USD. This is the pound versus the USD, and you can see that the market has been capped by this level up here, which is the 133.91 level. It was capped by this level on July 18th, 2018, March 2019, December 2019, and now we're actually trading above that. And the difference between this level and this down here level here is about 1,441 pip. And if we would treat it like a rectangle, it would suggest we can go all the way up to 148. Now, I'm not that bullish, especially with Brexit coming up, but maybe we'll head to the next major high, which will be 143.79, and that is what I'm watching. And even more realistically, maybe 140. So what should we do? Should we be buying right now today in the GBP versus the USD? Well, I don't think so. I think we should actually be waiting and wait for a bit of a pullback. Let the market close to begin with today, and then we'll see if we can move down. Now, obviously, if this goes much higher, like it's at 34.64 right now, so if it goes to 135, maybe tomorrow, if we just have a pullback to 133.70 or something like that, that might be enough. For now, I'm still anticipating a sharper pullback down to 132.75. Now, what's driving this market to the upside then? Well, it is the policy change by the Federal Reserve. This is where we kickstarted that move. What did the Federal Reserve, which is the central bank of the US, say at that date? Well, they said that they're going to aim for an average inflation of 2%, whereas in the past, they just allowed inflation to move above 2%, and then they have vastly increased interest rates. That what happened effectively is that the inflation came down quickly in the US, and sort of the average inflation rate is not being 2%. The average inflation rate is like 1.70 or something like that, 1.5. So what happens here is that changes the inflation expectations of the US investor or someone that invests in the US. So they don't anticipate 2% inflation. They anticipate 1.5, sorry. And that's what they want to change. And how they're going to do that? By keeping interest rates low for longer and for allowing Q as well to remain in play for longer. And that is causing the dollar just to weaken across the board. All right, don't forget to like this video and don't forget to comment as well. If you head to our homepage, and also there should be a little link here, you will be able to check out a longer video where I cover more than just the pound dollar. I cover many other currency pairs. I also cover main stock indices and gold and crude oil. Thanks so much for watching, and I'll see you guys soon. Bye-bye.